All right, thank you for joining into today's podcast. It's been a while since we did a podcast, and so STL decided to host one, Alex Matu. He is a crypto trader, and we'll be asking him a few questions on cryptocurrencies, among other questions for tonight. So before we start, I think I will read out his trading bio and then we can begin. So basically, Alex Matu is a communities builder. He's also a cryptocurrency trader at Ascendant DAO. He is the ambassador for FTX Exchange in Kenya. He's also a partner at bitcoinke.io, which is a leading media company for blockchain and cryptocurrency related content with a focus in Africa. Alex got involved in crypto trading first in 2016. He transitioned to full-time crypto futures on BitMEX in 2017. And then in 2020, he migrated to FTX Exchange, where he provides education for Africa's growing crypto community. At Ascendant DAO, Alex runs the trading desk. He also runs the research and strategies on automation. He is primarily involved in seeking alpha around mean reversion strategies of Bitcoin and big cap altcoins like Ethereum, as well as automating DeFi trading strategies. Ascendant DAO is a community-driven and seeks community-sourced market intelligence. And you can find Alex at the Ascendant DAO Community Daily on the BitKE Markets podcast, where he engages on cryptocurrency markets. So in a nutshell, Alex, it's an honor to have you. We also have Dennis Wanga in today's podcast. He'll be our co-host for tonight. So you can just briefly tell us about your crypto trading journey and how that has been for you.
Thank you, Sylvia. So it's great to be with you. And Gilbert and Dennis, thank you for hosting me. So as you've introduced me, I'm a cryptocurrencies trader, going about 5 years now. And I specialize mostly with Bitcoin, big major altcoins like Ethereum, Litecoin, Ripple, and the rest. And then recently, as of a year ago, I've been doing some DeFi trading, which then has opened up an entirely different playing ground for cryptocurrencies, blockchain development, and communities that are involved in cryptocurrencies. So, as you said, also the type of trading that I'm involved in is called futures trading. I think some of your audience could be familiar with futures. And so maybe down the road, we'll explain the different fields that are in cryptocurrency trading, apart from futures, and that also have provided opportunities for a good number of young people in Africa and around the world.
All right. Maybe for the people who really do not understand what cryptocurrencies are and just following up with that conversation, maybe you can also tell us what DeFi, what you do in DeFi, what DeFi means, and how people can tap into that.
All right. So I think the simplest way to explain cryptocurrencies is cryptos are digital assets that are manufactured or built cryptographically, right? So the first of these digital assets was called Bitcoin. So it came around 2009 and developed by some guy called Satoshi Nakamoto, either a group of people, one person, just we refer to them as an entity. So they're anonymous. No one knows whether they're alive or not, but they kickstarted the movement of having digital assets that could be transacted across distributed ledgers that we call blockchains, right? So another way maybe to describe this technology is as programmable money, right? Or if you could say the internet of money, right? So apart from Bitcoin, there are other cryptocurrencies that are in circulation and operation. The second largest one by market cap is called Ethereum, and that was developed by a team led by one Vitalik Buterin, who is a Canadian. So, and since then, many more have come up, thousands and thousands of other cryptocurrencies, and that has seen an evolution in this phenomena of digital money, or programmable money, to now where we are, where now we're doing DeFi, decentralized finance. Now, decentralized finance, on the other hand, is a set of technologies around digital assets that deal with use cases that are common in traditional finance, like lending, borrowing, things like that, and have brought them or have made a use case out of programmable money to having such problems as collateralized, uncollateralized, semi-collateralized lending and borrowing. So that's what DeFi is. People might also have come across a phenomena called NFTs, non-fungible tokens. So those are also part of DeFi. Maybe you've come across DAOs, right? DAOs are decentralized autonomous organizations. These are also made possible because of a feature called smart contracts that exists in some of these blockchains. And now the cryptocurrencies, we have to differentiate them from the underlying technology called blockchain, right? So cryptos are the values, or you can say value tokens, or how these blockchains are valued, right? So cryptocurrencies are what we can send from one person to another, or from one wallet to another. So I don't know if that answers your question,
Yeah,
Sylvia.
all right. And I guess also this is also an introduction for people to look more and research more into the concepts that we're discussing. But meanwhile, Alex, do you have like a trading philosophy around crypto trading, or do you, when you first entered into crypto, did you view it as a buy and hold sort of investment strategy, or you do trading from a speculation point of it, and which one would you recommend?
Right. So I think anyone who's traded has maybe come across that evolution of starting out, trying to figure out your way in the markets, whether they be crypto or global markets, equities, commodities, and such. So it starts off as, you're naive and you think you make some money here, and mostly you think it's a get rich quick scheme kind of thing. And there's also this aspect of speculation, majorly, betting, and there's also gambling, a gambling sort of perspective to it, right? So because you don't know what you're doing at the beginning. Then when you stick around, that's when you start to realize there's, it's like an iceberg. There's too much information that needs to be absorbed and learned, and there's skills to be acquired. And so at that point, then I figured I either do it full time or not at all. All right. So at first, I used to flip coins, right? Buy here, goes up, sell, that kind of thing. Buy, it goes down. Take your loss. All right. But when I was beginning, there was mostly spot trading, right? So you could buy, it loses value, but you're still holding the tokens, right? But you take the hit, and you can wait for them to go back up, or you can take your losses and go on to the next thing. So eventually what you realize is a few trades in, you're blowing your account, you're taking losses, and you start then to, of course, understand that there's much to it than just buying and selling. So yeah, I did begin with that speculation aspect, but then eventually after learning and teaching myself and using also some mentors, I got to settle into it because sooner or later I realized I was going to get poor.
And maybe you can also talk to us about crypto exchanges. I know you're the community lead for and representative for FTX. Also, you can tell us what FTX means and explain to people the relevance of having an exchange, just like we have exchanges in other markets now for the crypto, and how different it is from other exchanges that run cryptocurrencies like Binance, for instance.
Right. So let me just go back to a question you'd asked, maybe a second part of it that I feel I skipped is what like you'd recommend, right? Between buy and hold and speculation. In crypto, most traders have made money or turned profitable by simply buying and holding, right? And Bitcoin has been the best performing asset for the last 10 years, right? So buying and holding is safe, right? Buying and holding is safe. Of course, we're not giving any financial advice here. So it's entirely up to you to decide what's good for you. But buy and holding is safe, and any budding traders need to understand that most markets are sort of, when you're going in, your things are stacked against you. So it would be wise to nibble a bit and try buy and hold as you try and learn other methods of speculation and all of that. Then coming to next questions on exchanges. Now, an exchange is a marketplace where traders meet to transact, right? So it's a platform for traders to auction their supplies. These supplies now in this sense are cryptocurrencies. So people quote for these cryptocurrencies. So you can quote either to sell if you have them, or you can quote to buy. And so an exchange like the one I'm involved in called FTX.com, the Futures Trading Exchange, is involved in providing a platform for people to buy and sell cryptocurrencies. So if I continue on FTX, maybe I can touch on the different types of exchanges that exist. So in the name FTX, you'll realize there's a futures trading exchange, right? So FTX stands for Futures Trading Exchange. So the reason is an exchange can be a futures exchange, or it can be a P2p exchange, right? Or it can be a spot exchange, all right? So all these type of exchanges exist. So let's start with the basic type of exchange, which is a P2p exchange. So this is a peer-to-peer exchange. This, for example, would include paxful.com, localbitcoins.com, bitlato.com. Right, so these are big marketplaces doing good volumes. And so these are the first stopping point for anyone getting into crypto, because this is where you on-ramp. This is where you convert your shillings, your fiat to crypto, right? So you find offers listed that you can access via various payment methods like M-Pesa, bank transfer, cash, face-to-face, which I wouldn't recommend. So that's a peer-to-peer exchange. Then this other type of exchange, the futures exchange, is involved now with Now, this is more like now more listings, all right? So apart from those underlying assets like Bitcoin, Ethereum, Litecoin, then you get other instruments that are built on top of them. So these are called derivatives, right? So derivatives are instruments that follow the price of an underlying asset. So for example, on FTX, we have futures derivatives for Bitcoin, right? So if you recall, at first we'd said one way of trading would be to buy and hold, right? Now, when you're mostly, if you're buying and holding for a long time, you're mostly holding the underlying asset itself, right? If the prices go up, then you can redeem these cryptocurrencies and get cash back. But with these derivatives, you're able to trade both directions of the market, right? You can trade when the market is going up, you can trade when the market is going down. You can also trade volatility, right? You don't need to trade a direction. You can trade how much the assets, the underlying assets price moves away maybe from an anchor, right? So the field now expands, all right? You'll also find instruments like options on these futures exchanges. So that's the main difference between a futures exchange and a peer-to-peer exchange. FTX being a futures exchange, this is an exchange that was built by traders for traders and is known for its innovative derivatives products that include options, volatility products, tokenized stocks, leveraged tokens, over-the-counter kind of trading, where you can get a quote for Bitcoin or your favorite cryptocurrency through an OTC desk, right? So yeah, so FTX is about 2 years old, right? It's one of the youngest exchanges around. As of last evening, it's now playing around position 3 and 4 in terms of volumes traded per day, right? Now FTX has emerged to beat other exchanges because of these innovative products around that they provide, and we're seeing a lot of growth around that. And if you're in the crypto circles, you probably have seen some announcements by FTX around its expansion, dealing with regulation and such things. So we are indeed also planning around some of this growth that has emerged in the last year, right? Yeah, that's it for introduction to FTX.
All right, well explained. And before I open the floor to my co-hosts for any questions they may have, do you think that there will come a time when in Kenya we will have like crypto wallets where people will be able to, like we have seen in other, I think in Nigeria or in Ghana, they're like Bitcoin wallets. Do you think in Kenya we'll see such kind of a move?
Oh, yeah. So wallets, for maybe who those of us who are not familiar with, are sort of your account. So that's where you hold your Bitcoin or your cryptocurrency. So they have a wallet address that you provide someone, and then they send the crypto to that address, right? So you control the wallet. So yes, there are Kenyan-built wallets in existence, right? Those include Bitlipa. I think there are others there around 2013. I think we had BitPesa. At some point, we had BitSoko. all these are wallets built by Kenyans.
Oh yeah. Okay, I meant the physical wallet, like you'd go to an ATM bank wallet.
So do you mean a physical point where you can cash out or online cash into?
Yeah, like where you can exchange your
Yes.
crypto for Kenya shillings, for instance.
All right. So so as I mentioned, P2P platforms host a good number of Kenyan traders, right? Who you can meet up, though that's not necessary, right? You don't need to meet up with someone for them to, for you and them to perform the transaction, because there are escrow services that can assist with that, like paxful.com and the P2P trading desks. So in terms of physical points, we have had Bitcoin ATMs at one point or another, right? Currently, I'm not sure there's one in operation, but there was one a few months or a year or so ago at Kendrill Towers. They used to do Bitcoin withdrawals and deposits. But mostly it's a P2P sort of business, all right, via escrow. If you have someone you trust, same way if you'd have a supply of goods, you just send them money and then they'd send the goods your way. It's the same thing with crypto. You send the person the funds via M-Pesa or bank, and they send the funds to your wallet directly.
All right, I think I can open the floor for Gilbert and Dennis to also weigh in with their questions on this topic for tonight.
Hi, Alex.
Hello, Manu.
I was just wondering, from a trading perspective, how is counterparty risk catered for when it comes to trading these particular products on FTX?
All right, so that's a good question. Now, when you're selecting an exchange, risk is something you have to look out for. What mitigations are provided by an exchange? So FTX does have something we call cold wallets, right? So cold wallets are where Bitcoins are not stored online, so they're stored offline, right? So if and when you want to withdraw, you make the request, and in a few minutes, you get the crypto, or the funds are wired to your account. In terms of risks around hacking and all that, then most of cryptocurrency operators do ensure that they provide security measures with regards to having 2FA, IPs, and those tying your account to a certain IP, whitelisting, and all that, and such. If you're a big trader and you maybe fear risks to do with getting, what do you call it, getting liquidity, all right, so avoiding slippage and all those kind of things. FTX does provide mechanisms that incentivize market makers to be able to absorb your orders and such. You don't suffer much of that slippage. Also, with regard to support response, this is something that's at the core of the exchange, such that in case of anything, you are able to reach support quickly and have your account checked on and get the assistance that you need.
Thank you, Alex. Given the fact that there are so many exchanges coming up out there, we have FTX, we have Binance, we have, I think there are a couple of other ones out there. Is the cryptocurrency market big enough to be able to handle all these particular exchanges? Is there enough liquidity or volume in that whole entire ecosystem?
All right. So of course, crypto is fairly new compared to other markets that have been around for decades, right? So crypto just hit 1 decade, 1 decade in operation, and most of the projects and exchanges, are barely half a decade old. All right. So indeed, it's understandable for people coming into this field to have that sort of those sort of questions. But up until a year or so ago, crypto had been mostly a game for retailers, right? So once a while we'd say, this whale has moved the market, or, there's a lot of manipulation here and there. It's because someone who had a fairly a big account would easily sway the market one way or another, all right? Because most of the account holders were actually small, little capital players. But within the last year, we've seen the emergence of institutions that have been buying Bitcoin in large operations and remittances and such things. So, or even to just be part of their portfolio. And so more and more liquidity has been getting into these exchanges, and people are able to then feel safe trading in these markets. Now, FTX proud itself to being an institutional grade exchange, right? So it's quite institutional focused, right? FTX has the deepest order books in the ecosystem, and FTX market makers serve most of these other exchanges like Binance, BitMEX, Deribit, and so and so. And so what I'm saying is liquidity has been growing tremendously in the past number of months.
Would you care to mention the numbers in terms of liquidity?
All right. Now, the liquidity, of course, depends from asset to asset, right? So you'll find bigger assets in the crypto space like Bitcoin and Ethereum, trading a fairly large amount of volume than other smaller tokens, right?
Yeah.
So you'll find, for example, if I'm looking at the there's a feature called a volume monitor on FTX. So if I'm looking at the current standing right now, let me read you the volumes around here. Okay, so right now, for today, right, total volumes in crypto for the last 24 hours are about 145 billion USD, right? Right. So you can see we're not where Forex and other markets are, but that's an X figure compared to a multiple compared to where we were even 2 months ago, right? and fairly a fairly improvement from where the markets were 2 years ago.
Alex, will you mind also, talking about the volatility that might tend to be experienced in this particular market, trading these particular instruments or products, FTX, given the volumes that are there? What kind of volatility should traders expect to encounter?
All right. So this question comes up, or this is a concern that comes up a lot, and crypto are quite volatile. All right, crypto is quite volatile. But here's the thing: volatility for crypto is a feature. From where I stand, that's a feature and not a bug. All right. So in fact, if crypto was to get less and less volatile as time goes by, I think it starts to be quite a boring vocation for some of us. And so the bigger, the higher the market cap, of course, the less volatile that asset is. And Bitcoin is less volatile compared to Ethereum, compared to Litecoin, compared to other smaller tokens, maybe like Matic and Uniswap and so forth. But interestingly, you'll find people going for these more volatile sub-ecosystems in crypto. All right. So, for example, DeFi. DeFi is a subsector of crypto, right? And DeFi tokens are quite volatile. So you'll find some of them going tens and tens of percentages up or down, right? And you'll find people who are purely DeFi traders. They don't want to touch the legacy cryptos like Bitcoin or Ethereum, right? And that's where they're able to they're living. Now, in terms of feasibility, sustainability, of course, that's a point of concern as well, because if everything is not going up and things are not volatile, moving up, it stands that people are losing some of their funds. They don't know what they're doing. And that's also on top of some of these other risks. And like, you have to be able to manage your own wallet. You have to be able to secure your own wallet if you're not on an exchange, that is. Compounded on top of the volatility. So yeah. But then if you look at the demographic that's playing in crypto, they're fairly young people, right? So Gen Z and some of these younger millennials. And the type of trader in crypto is quite, the risk appetite is quite high. So the volatility for them is a good thing. And maybe I can point out that crypto, the amount of capital that you need to play this game is not as high as in other markets, right? So in crypto, you can buy Bitcoin for as little as long as you can cover the transaction fees. You can buy for as little as 500 shillings. That's $5, right? Some of these cryptos are doing 100% or so a day, right? One day from the next. So someone, or a college student out there with 1,000 shillings, and they want to maybe pay their rent or get some food from it, from this trading, they'd rather come to crypto because of this volatility and the opportunity that they think, or that they see as their way out in some ways.
Okay. The thing that most traders would be concerned about would be whether the liquidity can be able to handle that kind of volatility. is this volatility as a result of inadequate liquidity?
Yeah, so there's two, I guess, it's two sides of the same coin, right? Now, there's something in crypto called, I think also in other markets, but more so in crypto, FOMO, right? So the biggest driver of some of these movements up or down is the fear of missing out. So crypto is largely sentimental driven, all right? So as I said, the big number of participants, people who are always on social media, using Discord, Telegram, Twitter, right? So if you go to crypto Twitter and search the biggest influencers there, you'll see the kind of conversations that are being had. So it's people don't want to miss out, right? So this coin dropped. I have my $10 here. I want to put it there. Probably it's going to, I think I got in earlier than many other people. So probably, get a 2x, 3x and I'm out. I have my food for the day. So yeah, you can look at it as people, as demand driven by people fearing, having FOMO, and which has been a big driver of of DeFi tokens, or the growth we've seen in DeFi. But also, yes, liquidity is thin, right, in some of these newer tokens, right? And if someone comes and buys more of, creates some of this bigger demand, then if there's no supply to absorb that, then of course this goes up in a big way. And what that drives is it's sort of a look back, right? Coin goes up, it's highlighted on by an influencer, or it lights up on some of these alert systems that are very common in crypto, and more people come in to buy the same coin and it goes up. So there is that factor. But then again, in crypto, they'll tell you that's a feature, it's not a bug.
Interesting. Recently, the Dr. Julius Kipngetich, he's the COO for Equity Bank's COO. He said that was like a day ago. I don't know whether you have heard, and he said that cryptocurrency will end in tears. And he was talking about the concept of money and how it is an exchange of value, and that cryptocurrency doesn't represent that. So I don't know whether you know about this.
Yes. In fact, we wrote about this on our blog. We reported this. Now, now it's if for example, someone says this cryptocurrency doesn't have any value, or it's gonna end in tears, and then maybe I ask you, when that person say that, and what crypto is that? And then you say, this is on 2010, and they were talking about Bitcoin. Right, you probably wouldn't buy it. That person is someone you respect. Right, sure, you wouldn't buy it because it sort of makes sense then. Right, fast forward 10 years later, would they say the same thing? Right, because there are people saying that these same things about Bitcoin, even now, right? But then go talk to someone, for example, I know about the border rider who pays their fees, the kids' fees, using P2p trading of Bitcoin. Now tell that person Bitcoin does not have value. See if it makes sense to them. Talk to someone who's getting paid online from China or from Europe or America. It's a young person in college. They've just written an article. They've done some freelance work, and they're being paid via zero fees directly into their wallet instantly using maybe Ripple or FTT or stablecoin USDT, and then tell them, this thing doesn't have value. That you cannot converse with that person. They'll just laugh you off, right? So for us and many young people, this is as real as it gets. This, in fact, is more real than than other, more traditional ways of that are considered as more legitimate ways of exchanging value, getting value, or transacting, or currencies even. Literally, we're talking about people adopting currencies, trading in and out, getting paid for this, remittances globally, instantaneously, close to zero fees. We're talking about people getting under collateralized loans in DeFi. We're talking about an artist putting up a non-fungible token and getting paid for it by an anonymous person on the other end of that transaction. We're talking about someone looking at their wallet and it's going up percentages during a bull run, and they're cashing out and and paying their bills through it. We're talking about gamification of currencies, where we're talking about me being able to borrow on a platform in DeFi, and borrowing and using that money to give out loans or to arbitrage in an opportunity that I've just been informed about, either on social media or through my circles, right? And getting 10% off of that. You tell me that's not real, right? That's a conversation I think that young guys have now stopped having, right? They sort of ignore, right? Sad to say that. And they go on living their lives. And I currently opportunities are hard to come by for young, well-educated people who have come up in the information age, right? They know their way around social media and how to pick up on this information, and they're resourceful in that way. And so the world exists sort of entirely online. And this is the way that they've learned how to extract value out of the world. So telling that person this thing is not real, you're not making sense to them, unfortunately.
It's I'm assuming it's like telling them the internet is not real.
Exactly. And the thing is, they only need a phone and internet connection, and that's it. I was watching a documentary. Yeah, I was watching a documentary today on a village in the Philippines who, during COVID, turned to this platform called Axie Infinity, right? If maybe you can look it up later, but it's a game where you get paid to collect and farm characters in the game. And in the documentary, you could see people ranging from young guys in college
Axia,
to
just to cut you short. Axia what?
Axie Infinity.
Okay.
Axie Infinity. Yeah. So this is how these people made money. Life came to a standstill, and grandmothers started playing and downloading games on their phones to create characters and grow them, and then sell those characters as tokens. So you see, you can't tell those people that thing is fake, and they've done it continuously. It's what has fed them, right? So some of these use cases, again, I'd mentioned P2p trading. P2p trading is big in Africa. Nigeria is the biggest P2p market in the world, beating China, beating America. All right. So on the street in Lagos, ask someone about Bitcoin, they'll tell you what Bitcoin is. If they've touched Bitcoin, they likely have a phone, a wallet on their phone, right? A crypto wallet on their phone. So they're not waiting around to be told what's right, what's legitimate, what's not. People have to, make a living, and this provides that opportunity for them. So definitely they'll jump onto it.
Yeah.
And,
and I think, Alex, it's important for our listeners to for you to just talk about those particular countries or nations which have basically benefited from developments in the cryptocurrency space. Maybe, cryptocurrencies have served the citizens of those particular nations at one particular point in time. It's very important that you mention about that.
Yes. So like I mentioned, Nigeria is big on crypto. They don't sleep on crypto. Kenya is big on crypto as well. South Africa is big on crypto. Venezuela saw an uptick in Bitcoin mining and currency, using Bitcoin as a currency.
What is the reason, for all this?
So it depends from one country to another, or one community to another. So for example, with Venezuela, their currency really did go down in value. So they used Bitcoin as a currency for that period of time. In Zimbabwe, there was a time in 2017, Bitcoin was selling at a premium in Zimbabwe. In the entire world, like Zimbabwe had the most valuable price for Bitcoin around, it was 2017. And people were arbitraging for that opportunity. So when the currency really did go down in value, they turned to Bitcoin. Of course, now other use cases we've seen are around privacy. We saw Bitcoin come to the forefront of news via WikiLeaks. Of course, now we're talking about censorship and those kind of things. When WikiLeaks accounts were frozen and they couldn't transact, they used Bitcoin. So such use cases. But for me, the most important use case is saving people from poverty, right? Bitcoin again is the best performing asset for the last 10 years. A simple Google search will let anyone know about this. So simply holding this asset for a good number of people has really, really been beneficial, directly beneficial to them, has put food on the table for them. Now we saw recently El Salvador adopt Bitcoin as legal tender, right? There had reasons for this sort of moves. And each person, I think each citizen was airdropped about 30 USD worth of Bitcoin. That's a lot of money for, someone on the ground to use the day-to-day, activities.
Definitely. So Gilbert, you can chime in.
Yes, thank you, Dennis. Thank you, Alex, as well. So maybe one question I had to do with stable coins like USDT. Is it okay if you could explain to us how USDT came about and what the future is for stable coins compared to volatile coins such as Bitcoin?
Sure. Thank you, Gilbert. Now, stable coins, let me go back maybe to explaining or to reminding our listeners about crypto being programmable money, right? So this is a software, it's money that's software. So you can mold it and program it to suit or solve certain problems. So stable coins came about as a solution to volatility of Bitcoin and other cryptocurrencies, especially in times where Bitcoin was going down, right, in bear markets. People wanted to conserve their dollar value of their Bitcoin. So what they do is, at that time, is find someone who you can sell to quickly, and hopefully by the time you're striking the deal, it hasn't gone down that much, right? So USDT came about. Let me just go back a bit. So stable coins came about to solve that issue, all right, where you can quickly convert your Bitcoin to a US dollar pegged cryptocurrency. So these cryptocurrencies were solving for that, right? So USDT is the bigger one of these stable coins. Now a good number of them exist, right? So these function as pegs to the dollar, right? And you'll find almost all exchanges have stable coins, right? So if you're trading Bitcoin and you think it's going down, you might want to convert some of it to a USD pegged cryptocurrency like USDT to withstand that fall. Then you can buy back cheaper and get more Bitcoin, right? So that's that. Stable coins have now grown to be a major player in crypto. So if you go to an exchange, you find that most of the volume for that exchange is actually in stable coins, right? As people park their dollars, park their dollars there for a while, and then get into the market quickly, right? You see, if you were to cash out to fiat, Kenya shillings or dollars, real dollars in your account or in your physical wallet, if you wanted to buy then again cheaper, you would take a few much more time than someone who has it stored on the same exchange that they're buying Bitcoin, because on the exchange they simply have to click a button, convert this amount, So that's what stablecoin are for. Now, again, there's the number of stablecoins are growing tremendously, and stablecoins are actually another subsector of crypto, and are being studied deeply, to advanced levels, right? So how USDT works is they purport to have a similar or same amount of dollars or assets in an account or real estate or other assets for every minted USDT. All right. So USDT in full is called USD Tether. All right. So that's how that stable coin keeps its peg. Right. Now there are other stable coin kinds that have come up called algorithmic stable coins. All right. So these ones sort of say, okay, this stable coin X, it's pegged to the dollar, and how we maintain it to the dollar is if it goes down below the dollar, we incentivize people to buy more and more, right? So that the demand can go up and it comes back to $1. If it goes up above $1, the algorithms, create supply of this, and then it brings it down to the dollar, right? So there are various mechanisms around how to tie that stable coin to the dollar, and that's where a good number of crypto enthusiasts and researchers are now looking into, because stable coins have gotten to a point where they control a large part of the crypto market cap, right? So stable coins are something definitely to watch. In terms of here back home, in Kenya, in Africa generally, we've seen governments creating what we call CBDCs, right? Central bank digital currencies. So most of this will be stable coins. Most of this will be pegged to the local currencies, right? 1-to-1. I've seen Nigerian central bank announce that they're rolling one out, right? And I assume, I bet that a number of our countries will go in that direction in the coming months. So keep an eye out for such announcements.
All right, thank you for that. Do you think that stable coins are the best use case for, say, lending? Because I think that's the one thing that Bitcoin has had a challenge in, or these are the volatile coins, when it comes to that aspect of money being a standard of deferred payment. So before stable coins, we could say that cryptocurrency was not being able to meet that requirement of money of being a standard of deferred payment. But once stable coins came about, then it means you could actually use a stable coin, maybe depending on how it's been coded to work, or how the underlying algorithm behind it, for lending, whereby instead of people charging interest for a loan, you could actually get an interest-free loan and still be able to pay for it again in the stable coin if the value of the coin is kind of just standard over a period of time. Is there such kind of stable coins, or we haven't yet reached that level? Maybe we're just pegging to underlying fiat currencies.
Oh yeah. That's a good question, because for example, on FTX, you're able to lend your stable coins, and you're able to borrow against them, right? But of course, now the interest from lending out your stable coin is not as high as if you'd lent out or borrowed Bitcoin, right? So because their volatility is factored in. But yeah, stable coins are being used for lending a lot in a big way, especially in DeFi, right? So if you go to DeFi, you'll find protocols that enable you to lend out your stablecoin, lend out your Bitcoin, and get a good return on them.
That's good. So on the FTX platform, you do provide this kind of service for lending?
Yes, so on FTX, so what happens is once you have bought your crypto, you're able to put them up for lending. And then you earn from that interest. It's paid out real time. You don't have to wait. So what happens is usually other people who are coming to the platform, they need to borrow some margin to trade. They'll borrow. The engine will automatically then sort them out in the background, right? You won't know who's borrowing, who's borrowing your crypto, but the exchange exists to make that efficient.
How is the interest rate determined?
All right. So on FTX, you're able to so simply it's demand and supply, right? But on FTX, you're able to state how much interest you want to receive on your stables.
Okay.
So, yeah. So if the demand does get you interest, then you're good.
Okay.
All right, thanks for that. I think those are just the questions I wanted to ask. Maybe one last one to do with the NFTs, those, what are they called? Non-fungible tokens. What's your take on them? And do you think that that is actually where the bubble is when it comes to crypto and its other alternatives? And where do you think the value is in NFTs, based on the fact that there is no actual ownership of maybe some of these NFTs, where there are videos? I was seeing a story on that on CNBC, where it's just a video that that could be popular online, and then an NFT is created and people bid on that, yet they still don't have any actual ownership over the video. So what's your take on maybe the future of NFTs?
Wow. So NFTs are actually on the bleeding edge of crypto currently, right? As innovative as crypto is, it also has its outliers who, people are just doing crazy innovations around that. And some of the older participants, in terms of some of the guys who were there earlier might say, no, we won't touch that. I think that's a bubble, or I think that's not sustainable. And then time will tell if it does make sense and if it does work out. So personally, I haven't bought an NFT yet or sold. So I might not be the person to talk on this comprehensively, but NFTs now, I've been hearing about them for almost 2 years. So they've been around 2 years. For the last few months, they've really gotten to a point where, yep, they do seem like a bubble. But NFTs exist on their own. It's its own sub-ecosystem. So if that bubble were to burst, I don't think it would affect the rest of crypto. But nonetheless, NFTs are a legitimate field, and these assets are legitimate assets. We did see Kipchoge sell his NFT for his winning moment. Right, I think this was in the news. Everyone saw this. A couple of million shillings. He did have to. He did earn that from that. In terms of music and art, NFTs are providing a way for artists to directly benefit from their creations. And what happens is this unique digital asset that's online, if it's a video, I mean, you can download the video, you can have it on the phone, but there's only one unique copy of it in terms of that's signed by the author of this work. So that's what people are pegging that value on. So for example, we saw Jack Dorsey provide an NFT or auction an NFT for the first tweet, right? And it went for a good amount of money, and then that went to charity. These use cases are real. Again, I know there's some fog around these things, which is natural and expected, but people are directly benefiting from this technology.
Natural and expected.
Yeah, because if it depends on who you ask. In the crypto ecosystem, there are people who will not touch any other cryptocurrency apart from Bitcoin, and they'll tell you anything else, I'm not putting my money in.
It's on the issue of I'm still on that issue of interest rates. It's quite challenging to fathom that you just select the interest that you want.
Yes.
So
In fact,
the mechanism behind setting that rate. Yes. How, the way we understand how it works, the traditional markets, and how central banks play a role doing that. But in this other world, cryptocurrency world, it's quite hazy.
Yes. What it is it's fragmented. All right. So that's a powerful thing that or outcome that has emerged from crypto. It's so fragmented, and people are playing in such diverse pockets that arbitrage emerges naturally. right? So you'll find one exchange is giving you 2% maybe interest. Another you'll find is giving you up to 100% on the same asset, right? But now getting that information is where sort of the alpha is, right? So that's why we say these people are always online seeking information to turn it to value, right? This exchange is offering this much. This exchange is offering this much. Can I get it cheaper here and sell it here, right? So yeah, that is quite powerful, because the markets, as much as it's one movement, the markets, the vaults are so separate, such that there are communities that are willing to, quote unquote, live and die for sink with the ship for their own asset. They believe in it that much, right? And then you'll find other guys on the other side. They give themselves names. So you'll find each of these assets has, for example, one of my favorite coins is Link. We call ourselves Link Marines, right? You'll find other projects like Hexicans, Ethereums, or whatever, big Bitcoin maximalists. So people have this sense of community around their projects, and that's what gives it such power, because now this fragmentation, just as volatility, is a good thing. It's a feature of the ecosystem, and it's good. And the more fragmented and the more people converge around, their technologies or their projects, the more other people want to build their own and converge around them, right? And grow their value in their own way and take the communities in different directions completely, right? So for example, you'll find the use case of lending that you're talking about. Lending use cases are fragmented as well, right? They're quite different, right? The mechanisms for lending are quite different. So in traditional finance, you'll find some banks offer uncollateralized loans, or they offer under collateralized loans. Others cannot dare do that, right? Then it's just the two. It's either one or another, right? It's either collateralized or it's not. In crypto, it's a whole spectrum, right? You'll find things called flash loans. You'll find over collateralized loans. You'll find under collateralized loans, zero collateral, future collateral, or something like that. So it's this aspect of programmable money breeds a lot of creativity, and then that opens up the markets in quite an interesting way. Assets, when it comes to NFTs, to assets, NFTs are just one way. The other assets are tokenized assets, right? So for example, there are few platforms coming up trying to tokenize land in Kenya, right? And all that kind of thing, solutions. So it's a feature. It's a feature.
All right. Thank you so much, Alex. This has been quite informative, and thank you guys for making the time. My last question would be, before we come to the conclusion and before Alex, you give us your reference contact details, either on social media or your website mention where people can get more info on crypto. With the discussions that we have had on DeFi, for instance, and I know it's just a matter of time before, governments, are pro crypto. I don't know, maybe time will tell. But what can you advise investors who want to diversify their portfolio into crypto trading? And what are the security measures around, if say someone wants to invest in crypto and invest as a buy and hold investor long term, in terms of security and issues to do with passwords and stuff like that? So that's my last question.
All right, so thank you for that. And so there's two things here. So there's the individuals and then there's the institutions. So for individuals, you'll have to take this as the same way you do with your mobile wallet, right? Don't share your PIN with anyone. All right, so this goes without saying, of course. But there's more responsibility here in crypto because on the person in crypto, because see, if you lose your PIN or you lose your phone or someone steals your money, M-Pesa, there's a number you can call, right? Safaricom. You can call them and you can do reversals or whatever it is. In crypto, that does not exist, right? That is, if you're holding your assets for long and you're holding them in your wallet, on your phone, on your a paper wallet written down somewhere, or your computer, or a hardware wallet, then the security and safety of that asset falls on you and you alone, right? So you have to store your keys safely, right? You have to back up your keys, right? If you're holding for long. Now, with institutions, there are solutions around this, okay? So an institution maybe is holding a big figure amount in Bitcoin for their clients. So what happens? The security measures that are there, majorly, the first one is a multi-sig wallet. So where the authorization of transaction from that wallet requires a majority signatures, right? So from the parties that are supposed to do that, right? So if it's 10 people, you can say 7 out of 10 can sign off on transactions. So those technologies do exist in crypto. For institutions also and big holders of crypto, there are companies that do the work of holding the crypto for you. But then again, this goes against the whole crypto ethos, where you're supposed to be your own guardian, custodian, right? When it comes to exchanges, if you're a trader, then the exchange that you choose to trade on needs to have security measures like we mentioned, cold wallets, 2FA, verification during login, IP whitelisting. Maybe you can only access the exchange via API if you're trading via bot, and give the API keys certain permissions where it can only trade and it cannot withdraw. Support, you need to be able to reach support quick, right? So such measures are what I'd suggest people to look into. And also there is insurance. Again, the crypto projects that are solving for insurance. So people are insuring against loss of assets, hackings, and all those kind of things. So those are also there for people to consider.
All right, that's actually new information that there's insurance for crypto. I didn't know that. And so, yeah, as we conclude, Alex, where can people find you on social media if you're active on social media? And then also you can mention your website. I know you've been around for quite some time, so you can conclude by giving us that info.
Yes, so first let me say thank you very much for this talk. Been a fan of STL for a while. I always look out for your interviews and lessons when they drop, and learn quite a lot. So I'm not very active on social media. I use it as a tool for research. Maybe it's something I'll get around to, but if you'd like to follow me and maybe follow some things I research on, retweet and all that, you can find me on Twitter, Alexi Matu at at Alexi Matu, Alexi with a Y at the end of Alex. And then daily, I'm on the Ascendant DAO Telegram group. So just at Ascendant DAO. You'll also find us in the FTX Africa group, chatting with traders, communicating there, and trying to figure out the markets. So if you go to FTX_Africa on Telegram, you can find us there, say hi, and we'll welcome you. If you want to keep up on Africa-focused blockchain news, subscribe to bitcoinke.io. So we're always dropping content daily, multiple pieces, videos, as well as articles. So bitcoinke.io is our home. And with that, Sylvia, thank you very much. Mwendwa, thank you very much.
All right. Thank you also to my co-hosts and to you, Alex, for making the time on a Saturday night. And you can send us the links to those. We'll link them down on our YouTube channel as we make the upload. The links basically to the website and the socials. And of course, thank you for also the collaboration on this podcast. And we look forward to future engagements together with you and the entire team at FTX. It's been great hosting you.
Thank you very much, and enjoy the rest of your day.
All right.
Thank you, Alex.
Cheers. Good night.